Hello, everyone. Welcome to today's webinar, where we're going to go over the high levels of the CARES Act.
So this is a new act that was just put into place on Friday, and there's still a lot of unknowns and a lot of things that are developing as we go along. But we wanted to give you information as quickly as we could get it. We've reached out to a lot of people and gotten a lot of great information. We've had a lot of resources working with us. So I think that we have enough to get you through and get you started. We're kind of waiting for a few more people to join our presentation and we'll get started. Just to let you guys know, we are not attorneys, we are not CPAs, we are not accountants, we are practicing dentists just like many of you. But my passion is business, and it's one of the things that I do teach with Stanley Institute is the business of dentistry. So when there's anything that's related to helping your business grow and helping you to become a better business owner, I get really excited. So when we start talking about money and loans and making our business profitable, that's where I start jumping up and down and really getting excited. So this stuff has been great for me. I've really enjoyed doing it. I don't enjoy the situation that we've been put in to have to do it, but I think the government's moving along to help us to regain our traction with our businesses. And I also feel like, guys, that we've been given an opportunity, and it's unfortunate that people are having to suffer with this virus, but the opportunity that we've been given is an opportunity for us to stop and work on our business, not in our business. And it's one of the things I say in our business class a lot, that we need to work on our business. So there's a great opportunity for us to sit down and look at some of our procedure codes and see where we need to kick things up a little bit, see where we may need to get more training, also to put procedures in place, some systems in place, look at our profit loss. There are a lot of things we can do with this downtime. As a matter of fact, tomorrow I'm doing a webinar with Henry Schein on just that. What can you do? What can your team do during this time period?
So I don't do much with the business side of things at all. And what I teach at the Stanley Institute is how to restore people to form and function. So I am very much interested in getting past this little trial that we're all under right now and getting back to helping people have a beautiful smile.
So you ready to start with our presentation, Dr. Rob?
Yeah, let's go ahead and start.
Okay. So guys, I'm going to go ahead and put the presentation on for you so that you can see what we have for today. Okay, great.
Now, just before Dr. Bobbi starts here, just so that you know, on the screen, on your Zoom screen, if you don't see it, if you hover over the top or the bottom of the window, you'll see a little pop-up menu. There is a questions and answer forum, and there's also a chat window. So you're welcome to send questions throughout the presentation, and we'll incorporate those as we will, and then at the end, we'll have a nice wrap-up with questions and answers at the end.
Yes, we welcome all of your questions, so please let us know. We'll answer them the best that we can. So again, the disclaimer is that we are not legal or accountants. We are simple dentists like you. We're sharing information that we've gathered, and we're going to bring it to you as we get it. Please make sure that you seek advice from your banker, from your financial advisor, before you incorporate anything that works for you, because we're all different and we want to make sure that you're being serviced appropriately. So what is this CARES Act? The CARES Act is the Coronavirus Act Relief and Economic Security Act. That's what the CARES stands for. It's a $2.2 trillion package that was signed just on Friday. So there have only been 2 business days for our financial people to really dig in and see what is going on with this. There's over 800 pages in this bill that they're having to decipher what it means. So we'll give you a high view of what it all means for you. It is the biggest spending bill in the history of the United States, and it's intended to bridge the gap in employment for the next 3 months for you as a small business owner. Here's a little breakdown that Live Oak Bank sent to me. If you guys don't know Live Oak Bank, they are in Wilmington, and they work very closely with dentists. There are 2...
Wilmington, North Carolina.
Oh, I'm sorry, Wilmington, North Carolina. There are 2 types of financial stimulus that you can get with the CARE bill.
There's the Paycheck Protection Program, which I'm going to call PPP. And then there's the Economic Injury Disaster Loan, which is kind of like a bridge over loan. You can apply for both of these, and I'll explain that. And one will roll over into the other. This is a nice little breakdown for us to be able to see everything as a whole. These slides will be available in this presentation that's being recorded, so you guys feel free to go back and look at this, but I'm going to talk to you about these in detail here so that you guys know exactly what's going on. We'll start with the SBA Economic Injury Disaster Loan, and many people call this the disaster loan. You can apply for this today. And my CPA and my banker has encouraged me strongly to go out and apply for this. So I did this yesterday. When you apply for this bill, it will ask you if you want to get $10,000 automatically deposited in your account in the next 3 days. And I said yes. That $10,000 is forgivable, so you will not have to pay that back. However, that is not in addition to other money that you're going to get that's going to be forgivable. So we will talk about that. That's the PPP. That money is forgivable. And so if you go out and take out this loan today, that first $10,000 that rolls over, it will roll over into the PPP later. And we'll talk, I'll explain that so that you have a little bit of understanding. But if you go out today and apply for this loan, this disaster loan, you can apply for up to $2 million today, and you can get $10,000 put into your checking account in 3 days. They will ask you your checking account number, your routing number, you just put it all in, and then magically $10,000 appears in your bank account. Even in sometimes when the application is still being processed, because they want to get this money in your pocket right away so that you can survive and your business can survive.
Dr. Bobbi, we have a quick question. Where do they go
to
apply for that?
That's a great question, Dr. Rob. Go to sba.gov. It's the SBA Small Business Administration. It's their website, sba.gov, and it'll say something like disaster relief. You just click on that and it takes you right into where you need to apply. It takes like 10 minutes to apply. I will tell you guys, the website is they're getting a lot of traffic, so if it crashes on you, just go back. Better to go back at late hours or early hours if you cannot get in. There are a lot of people applying for this money. So if you want to go out and apply for that, you can do that today. So with this EIDL disaster loan, you can go ahead and apply for this, but technically you can't have two loans with the SBA. So what happens is they will roll this loan into your PPP loan. So if you are going to get a PPP loan, they'll just roll this over in later. So the PPP loan, which is the Paycheck Protection Program, that is the program that you really want to apply for, because that's technically free money. And we'll talk about why that's free. It does come with qualifications and requirements, so you have to make sure that you fall in that category, but you can get this money without having to be to repay it. How much money can you get? You can get 2.5 times your average monthly payroll costs, and we'll talk about that a little bit later. So if you need money, go ahead, or if you need more than 2.5 times your average monthly payroll, go ahead and apply for that EIDL. You can get up to $2 million with that, and then you can refinance that later if you need to into your PPP. But you can't do it the other way around. If you take out the PPP, you cannot go back and take out the disaster loan. That is my understanding at this point. So if you want the disaster loan, take that out first, up to $2 million. So let's go into this PPP, because this is what people are really excited about. It's the Paycheck Protection Program, or the Payroll Protection Program. This is $349 billion that the government has set aside for businesses under 500 employees. Now, guys, $349 billion is a lot of money, but not for all the businesses that are in need right now. And what that means is that money's going to go away fast. So the financial industry is saying, if you think you want to be part of this, please be one of the first ones to apply, because they're pretty sure that that money is going to be depleted, and when it's gone, it's gone. Now, we think the government may give us more later, but we don't know because they have not told us that. So when will it be available? We know that it's going to be available soon. They're telling us that we may be able to apply as early as tomorrow. With this loan, with the PPP loan, you do need to apply with your bank. You cannot do that on the SBA website. This will be only through your bankers. So if you have a relationship with a bank or you work with a bank, you may want to go ahead and give them a call. Let them know that you want to be one of the first ones to apply, because you do want to go ahead and get that loan/grant as soon as possible. You must have been in business prior to February 15th and have paid employees and paid payroll taxes by February 15th to be eligible to get this PPP. Again, the loan amount, you can get up to $10 million. However, the loan amount that you get will be 2.5 times your average monthly payroll. Now, a lot of people have said, yes, but that's in addition to your mortgage and your utilities, and it is not. The loan amount, as we understand it now, is only 2.5 times your average monthly payroll. Now, there's some things that you need to know. If your payroll includes an employee, like a doctor who's a high income earner, who earns more than $100,000 a year, you have to lower that monthly payroll down to that employee at $8,300 per month. So you have to do some math there. You can't just take an average of your monthly payroll and times it times 2.5 if there's somebody making more than $100 million, $100,000, I'm sorry. Annually. You have to adjust that. So if you have a question about that, my email's at the end and I can explain it a little bit better, but I would suggest that you speak with your accountant about that and let them figure that out for you.
A quick question that just came in. The slides, will they be available after the presentation?
This is a recorded presentation, and you'll be able to go back through this to see all of these slides.
Okay, great. And then one more question with regards to the small business loan. A person asked, if I already have a small business loan and I've been using that for the last couple of years, can I qualify for this new one?
Yes. So our understanding is that if you have a small business loan, what will happen is you will still be able to qualify for the PPP, but the small business loan will roll into that. Now, is that in addition to the PPP? We believe so. We do know that in the past, there have been loans that have said you're not allowed to go take out other loans at other places. That's been wiped away by this act. This act says that if you have a loan that forbids you from taking out a loan in another location, that's no longer true. So same thing with the SBA. They have said that you can take out a PPP with the SBA. I don't know if they're going to roll them all together or not, but we do know that they have said, and our understanding is that you can get a PPP loan/grant in addition to what you already have. So the real question is, can this be forgiven? Because we all want that. We all want a loan that can be forgiven. So the answer is yes, but if, and here's the if, from the time that that money hits your account, you have to spend it within 8 weeks. And there are things that you have to spend it on. Now, they have told us that they will allow you to backtrack spending. So if you've paid payroll salary prior to getting the money, you can use the money to pay off that payroll salary. Also, there are things that you have to spend this money on. You have to spend it on salaries. You have to spend it on group health insurance premiums if you're paying that, retirement plan contributions, rent, interest on pre-existing debt, including mortgage, and utilities. So again, if you spend this money on these things, it will be forgiven. And there are a couple other things you need to know to qualify for the forgiven, but I need you to know that you can't take this money and go buy a new car, because The government is going to come back and they're going to want to know what you spent this money on. And it has to be on these things only. It cannot be on anything outside of this category. Now, what happens if you don't spend the money on this? What happens if you decide to go buy a new car or to go buy a new ICAP machine? If you decide to do that, then what will happen is it will convert to a loan. This loan will be no higher than 4% interest. It can be lower, but no higher than 4% interest. And it will be repayable over the next 10 years. And some people have even said 30 years, so I'll say 10 to 30 years. You guys can check in on that. There is no prepayment penalty on that. And they also will not require you to make payments the first 6 to 12 months. However, interest will start right away. So it may be a good deal for you guys if you want to take this and not pay payroll salary and buy a piece of equipment. I mean, 4% is not a bad interest rate. But the whole reason the government is doing this is so that we can rehire our employees, because they realize there are a lot of people on unemployment who need to work and they want to work. And so they want to stimulate the economy so that we can put people back to work. So that's what I would encourage you to use it for. There's great news with this, this paycheck protection program. There are no origination fees that you have to pay. No underwriting standards that you need. It's not based on need. If you have $5 million in the bank, they're not going to deny you because you have money. Everybody qualifies. So it's not based on need. There's no personal guarantee. You don't have to put your house down on it. You can expect that documentation is going to be very light, meaning they're just going to ask a couple of questions and keep moving because they want the application process to go quick and they want to get this money in your hands very quickly. Again, if previous loans have forbid you from taking out additional loans, that's being waived. So call your lender and just make sure your lender knows that this is something that you plan on doing. This PPP is good for all dental offices, sole proprietors, and independent contractors. So basically, if you have payroll, you can get this loan forgiveness PPP.
That's a good opportunity for me to ask a question that came in. Some doctors, some dental offices will actually run as an S Corp, and then they'll have a C Corp on the side that they're using as a second company, and they might have a limited partnership where they have family members in there. And the question this doctor had asked is, do each one of those business entities qualify for these funds? So
each of them qualify, assuming they all have payroll. Because remember, this is based on payroll. So if you have a company that you're not doing a 1099 from, or you don't have a payroll being run through that company, then you cannot get this because it's based on payroll.
Okay, great.
So what should you do? The first thing you need to do is really sit down and look at your numbers and decide how much money do you really need. Do I need just enough to pay my team members? Do I have some bills that are going to be coming in? And decide exactly how much you're going to need. And then look and see how much your monthly payroll average is. Multiply that times 2.5, and then see if those numbers equal. If they do, great. Then you don't need to do anything but apply for the PPP. But if your expenses are going to be more than what you think you're going to get in this PPP, then you want to go ahead and first apply for this EIDL. So if you think you need more money than 2.5 your monthly average payroll, you want to apply for this disaster loan first. Guys, you cannot apply for the PPP and then go back and apply for the disaster loan. They will not allow you to do that. You have to do the disaster loan first and then apply for the PPP. So please make sure you're doing that. Now, there was a question about, are there any disadvantages to apply for the EIDL, which is the disaster loan? The only disadvantage I've heard which has also come in the form of an advantage from other people. So I did hear one person say, because the EIDL will need to be rolled over into the PPP, it may delay the processing and it may take a little bit longer to get your money from the PPP. On the other hand, I've been told that because you've initiated a loan with the SBA through the EIDL, it may speed up the process. I've been told that I should go ahead and get the disaster relief loan first and then apply for the PPP. So that is what I have done because it has come from my banker and my CPA. So I feel comfortable doing that, and that's what I have done. Again, you guys speak with your tax attorneys, your CPAs, your bankers, and find out what works best for you. So everyone should apply for this PPP loan. And I'm saying loan, it's really a grant if you use it in the right way. And why should everybody apply for it? Because it's free money from the government. They want you to have it because they want you to get your team members back on the job. So everybody should apply for this. It's opening soon. We know that applications are opening soon, and we know that it's going to stay open through June 30th or until the money runs out. So you can apply June 29th if you want to wait, assuming there's money there, that would be fine. The maximum amount that you can get through this is $10 million with $349 billion total. So again, we don't think that's going to last long. We think it's going to go quickly. There may be another funding phase 4 through Congress. We just don't know. So I would encourage you to apply early if you feel like you need this PPP money. So what to do now? Well, if your employees are on unemployment, or even if they're not unemployed, I would suggest that you go ahead and apply for your PPP. I personally am not going to rehire anyone until I know that I qualify for this, and I may not rehire anyone until I know when my dental office is going to reopen. Because if I hire them now and my dental office is extended to be closed longer, I may not have enough to keep them employed and pay my rent. On the other hand, if that happens, the government will most likely come through with a second funding, but I don't want to have to count on that. So I want to know more things about what's going to happen before I fund my employees to rehire them, because right now they are on unemployment and at least they're getting something. Now, one thing you need to know is when that money hits the bank, you have 8 weeks to spend it. If you don't spend it on qualifying things within 8 weeks, you do have to pay it back. The other thing you need to know is that at the end of the year, you need to have employed the same amount of people that you have from that monthly average. So if you had 10 employees, then you need to have 10 employees at the end of the year. You also need to have the same amount of payroll dollars, meaning if you rehired everybody and you said everybody's getting a 10% pay cut because we need to make this last, that's fine. But 10% of that PPP money, it's going to have to be repaid to the government in the form of a loan. They will not forgive that last 10%. So you have to have the same number of employees and the same payroll percentage to be able to get that forgiveness. So be careful that you don't change those numbers before the end of the year.
We have a good question. You just mentioned that there must be used in 8 weeks. The question that was asked was, when does the 8-week period start?
So our understanding, and again, a lot of this is just evolving as we know it, our understanding is that that 8-week begins when the money hits your checking account. So there are other things to this CARE Act that I want to share with you, and I'm just hitting on a couple of them. They may or may not be beneficial to you, but you need to know. One of the things is there's been a deferment of employers' Social Security tax, which means the 6.2% tax that the employer pays, the employer share, not the share that you take out of your employee paycheck, but the share that you pay, the 6.2%. You do not have to pay that this year. You can pay that next year. As a matter of fact, you can pay half of what you owe for this year next year by December 2021, and then pay the other half by December 2020. But talk to your payroll company, because this won't happen automatically. You have to direct them to make sure that it happens. The other thing, do you have another question?
I have a question about independent contractors and 1099s. So independent contractors, do they qualify?
Independent contractors do qualify for the PPP loan/grant. So yes, it's for sole proprietors, it's for corporations, and it's for independent contractors. So please apply through your banker. Now again, the PPP loan can only be applied through your bank. The EIDL loan could be applied online through the SBA.gov.
When you apply for that SBA loan online for the EIDL, do they ask you for how much you were asking for?
No, they do not. What they ask you for is they ask you what your yearly income was. So what I did was I went back to my last tax filing that I filed. It asked for what my income was off of that tax. The last time I filed taxes was 2018. So that's what I based it on, because I didn't want to have to dig out my numbers from 19. So I just took that top line, which was what my income was from my practice in 2018, and I put that in there. And then the other thing they asked was cost of goods. And that's also in your taxes. I think it's line 3 or 4. It literally says cost of goods, and you put that amount in there. And then they have a couple other questions like how many employees did you have on a certain day and that sort of thing. But that's it. That's all they ask you. And then they ask your checking account number and your routing number. So you need to have that handy also. So in 2017, Trump actually changed the law where you could not fully deduct, you could not fully reduce your taxable income to 0 based on a net operating loss. So you couldn't take your income tax due all the way down to, or your income taxable income all the way down to 0 with your net losses. That has now been repealed, and you can. So not only can we reduce our taxable income down to 0 based on our losses for 2020, we'll be able to do it for 2019, and we can go back and amend 2018 to get tax money back if we had a loss. So check with your CPA, check with your tax accountants, find out if you had a loss that you carried forward, and if you did, go back and amend those taxes, because you could get money back on your taxes for that. And that's a biggie, because a lot of times we do carry losses forward for many years. For those of you guys who have what's called a defined benefit or a cash balance plan, now this is different from a profit sharing or 401k or a safe harbor. This is literally a defined benefit cash balance plan in your retirement. The funding rules have been eased. So normally it requires contributions when the stock market goes down to prevent the plan from being underfunded. What the CARES Act has done is it has delayed the 2019 required contributions from September till January 2021. So you don't have to pay your contributions for 2019 until January 2021. It has not said how it's going to change for 2020. So if you have a defined benefit cash balance plan, it has been advised that you may want to consider freezing the benefits for that plan for the year of 2020 if your employees have not worked more than 1,000 hours, which normally they don't get to 1,000 hours till somewhere around May. So this may be something you want to look at ASAP, because what that means is with a a defined benefit cash balance plan, if the stock market goes down, you have to put money in there to keep that from being underfunded and to bring it back up to level. And as we all know, the stock market has dropped dramatically. So if you freeze your plan for 2020, at least you don't have to put contributions in there. Now you still have to bring it back up so it's not underfunded, but you don't have to put your contributions back don't have to put contributions in for 2020. So please, you would want to talk to your program administrator for your retirement plan or your financial advisor about this if you believe that you have a defined benefit cash balance plan. There's also the individual recovery rebate. This is a check that the government is sending out to every American under a certain income category.
And above a certain age.
And above a certain age.
Well, we're kind of laughing at this because our teenage kids who don't make any money are just very excited about this program.
So it's $1,200 per person or $2,400 per couple. So And then also it's $500 for every child under 16. There is a phase out income of $75,000 for $75,000 for single, and then it starts to phase out completely at $99,000 single, and then also $150,000 for couples. It starts to phase down, and then it phases out at $198,000 per couple. So doctors, if you make more than $198,000 per couple or more than $99,000 single, you would not qualify for this at all.
If you made $200,000 and you didn't qualify, would your dependent qualify?
I don't know the answer to that, Dr. Rob. I do not know.
Okay.
This is determined by your 2019 taxes. If you did not file your 19 yet, then it would go back and be determined by your 2018 taxes. So anybody who filed a 2018 tax that is below these income categories will receive a check up to $1,200 per person and $500 per person under the age of 16. And then you can also get this money if your 2020 income is less than these threshold amounts. You will get a check in 2020, we are being told. There's no taxes due on this money, so it's free money. You don't have to pay taxes on it. And even people who are on Social Security will get this money if their income level is not higher than these threshold amounts. So it's going to be free cash for Americans because, again, the government is trying to put money back into our economy so that we can survive and help get our economy going again. The distributions for IRAs and qualified plans have changed. Normally, you could not take out money early without a 10% penalty. They have now waived that 10% penalty for what they're calling a hardship distribution clause. So doctors, if you have a IRA or qualified plan in your office, you can write in a hardship distribution clause, which the government is allowing you to do, and people can take out money up to $100,000 before December 31st of 2020 without paying that 10% penalty. Now, you still have to pay taxes on that money. However, they're allowing you to pay that taxes over this year and the next 2 years. So it would be a third of the money of the taxes due this year, 1/3 due next year in 2021, and then 1/3 due in 2022. Also, you will have the ability to put that money back into your plan. If you want to put those contributions back in, you can put them back in over the next 3 years if you want to refund your retirement plan. So again, you can get up to $100,000 out of your retirement plan without paying the 10% penalty. You will have to pay income tax on that, but that income tax could be paid over the next 3 years, including this year. There are loans that you can take on your retirement plans. Normally, you could only take up to $50,000. They have increased that up to $100,000. So you can now borrow on your 401k plan or your IRA up to $100,000. Now, the financial advisors are advising you that if you can get a PPP loan/grant, do not borrow on your 401k for your business if you can get this PPP and survive on that. And why would you want to do that? Because the PPP is free money from the government. When you borrow on your retirement plan, that's your money that's no longer in retirement to make money for you. So please be careful. Don't take money out of your retirement unless you absolutely have to. And then finally, minimal distributions for retired people. So if you are a retired doctor, if you're over the age of 72, you are required to take out a minimal distribution from your retirement plan. They have eased that, and they are no longer requiring you to take out a distribution if you don't desire to take out one. So you now have the option to leave that money in your IRA or your 401k instead of being forced to take out that distribution. Charitable deductions were also mentioned in this act because they feel that the charitable organizations are going to suffer greatly during this time, and they want us to give back. So there are some rules that they are allowing you to give more to charity and then do what's called an above the line charity donation deductible. So check with your CPA or your tax attorney on that. It's not a lot of money you can give, but it's more than we could give in the past. So just make sure you check those numbers if you do want to donate, and you can get a tax deduction for that.
Okay, so before we exit the slides, we have two main high-level questions that have been asked numerous times. The first one is, and it goes, I think, to like slide 2 or 3 there, if you want to go back to it or just answer it. The question is, can you summarize the PPP money versus the EIDL money? Can you go back and summarize the difference between the two real quick? And then the follow-up question is people are asking a lot of questions regarding what qualifies as where I can use that money.
Okay.
Where can I use that money?
Okay, great. So let me put this slide up so we can look at the difference between the two, because this is a great little graph that Live Oak Bank in Wilmington, North Carolina sent out. And I think it does a really good job of summarizing this information. So basically, on one side you have PPP, and on the other side you have EIDL. So basically, how much money can you get? For the PPP, we can get 2.5 times our monthly payroll, up to $10 million. With the EIDL, you can get up to $2 million. With the PPP, it's a fixed percentage rate at 4% that starts being paid back in 6 to 12 months over a period of 10 years. And you can be forgiven up to 100% of that money and not have to pay any of it back if you use it for the right things. And I'll show you what those things are right after we review this. With the EIDL, the disaster loan, again, you can get up to $2 million. That is at a 3.75% interest rate. You do have to pay that back with the exception of the first $10,000. That first $10,000 that you do not have to pay back, if you take out a PPP, it will be rolled over into the PPP as part of that. So what that means is if you get $50,000 from PPP and you had the $10,000 from EIDL, the $10,000 will roll over into the 50, and instead of you having $60,000, you still just have 50. You don't have an addition to. So that's going to be part of it. You have 30 years to pay back the EIDL, but none of it will be forgiven. It is a loan. It's not a grant. So the PPP is a grant if you use it for the right reasons. The EIDL is a loan. It's a low interest loan that you can use to fund your office, and you can use it for anything you want to use it for. I think I'm correct on that. Let's go into what you have to use the PPP for to be forgiven. Our understanding is from the minute it hits your checking account, you have 8 weeks to spend it. At the end of 8 weeks, if there's any left over that you can't justify that you spent on any of the things on the screen, you will have to start paying that amount back as a loan. So what can you use it for? You can use it for salaries. You can use it for group health insurance premiums, retirement plan contributions, rent, interest, including interest on your mortgage of your building, not your home, your building, and in any pre-existing debt. So you can't go out and buy new equipment and then say, now I have interest on that. It's any pre-existing debt, and your utilities, phone, electricity, those sorts of utilities. And all of this is spelled out on the SBA website, but your banks have this information also. And my suggestion to you is to reach out to your banker to get all your questions answered, because they're getting this information firsthand as quick as they can. And so they'll have the answers for you.
Okay. There are a couple of questions surrounding individual contractors, the 1099 there are people that are online that are individual contractors,
Mhm.
and then there are people that have employed individual contractors. What, if you're in either one of those categories, what should you do?
So the employers who have 1099 people, when you are looking to do a PPP grant, you are taking your payroll, which does not have your 1099 people on there. This is only your payroll, and that's the money that you are getting. You are allowed to pay salary with that. 1099 is not included in that salary, as I understand it. Now, please get that clarification from your financial advisors and your bankers. As I understand it, the 1099 people then have the option to go out and apply for the PPP to get funded for their salary. So again, please talk to your banker and let your banker walk you through this, because this is only literally 48 business hours old, and it's 800 pages that people have to understand. So as we talk, it's becoming better and better understood, and things are getting put down, T's are getting crossed and I's are getting dotted. So we want to make sure that we have up-to-date information. If you look at the information that came out on Friday when this law was signed, you're not looking at up-to-date information, because it has changed since Friday. So you have to be real careful that you're getting the most up-to-date information. And that's why I'm strongly encouraging you to go to your banker, because they're meeting on a regular basis about this, and they're understanding the changes that are taking place, so that you guys can get the maximum amount of money.
Dr. Lesko just wrote in that she just got a notification hot off the press that the PPP will be open for applications April 3rd.
Oh, that's great. That's on Friday. So Dr. Lesko, thank you for that information. So it sounds like on Friday, we'll be able to apply for these. So everybody at, the strike of 8 o'clock or whenever your bank opens, make sure that you're on the phone with your banker. Go ahead and send an email to your banker today, letting them know that you want to do that as soon as it's available, so they can direct you where to go to get that application started on Friday.
Dr. Stanley, there are a few folks out there that are carrying student debt.
Okay.
And they're interested in, is it possible that they might be able to use one or both of these programs to help them with their student debt?
So the PPP is specifically for this. There are some things that I did not include in here under the CARE Act that talks about federally funded student loan programs. They have made some exceptions. They've made exceptions for people who are paying their federally funded loan programs, as well as employers who are paying for federally funded student loan programs for their employees. So there is some talk in this CARE Act that will help you if you're on a federal student loan, not necessarily a private student loan. So I would encourage you guys to go out and get that information. I did not include it because there's a lot of ambiguity. Thank you. There for that. So you guys, if you do have a federal student loan, I would highly encourage you to go out and look at the CARES Act online at sba.gov and find out what they can do for you.
Dr. Stanley, right in the middle of starting up a startup. I haven't even opened my doors yet.
Oh.
Give me some suggestions.
So if you have not paid a payroll, you do not qualify for PPP, unfortunately, and I am so sorry. If you have paid a payroll, then obviously you can get the PPP. If you have not, if you do not have a payroll, then what I would suggest is that you do the EIDL, because that is not based on payroll. That is just based on I need money now. So if you need money to get your business up and running as soon as we're off this quarantine, then that's what I would suggest for you.
If so many different dental offices have gone down the path of laying people off or terminating their employees. So they all are in different timelines. So some people did it 2 weeks ago. Some people just did it this week. With respect to the PPP, how would they calculate? Will they go back into February and look at that and track payroll expenses for February? Or do we need to concern ourselves with that?
Say that again.
The PPP money, will they go back and look at February? Do they care what you paid your employees in February? Or do you just have the 8 weeks from the minute you get the money to spend it on your employees?
So the way that we understand it is that it is based on the average of your monthly salary for the last 12 months. So you would look at that average. not necessarily since you've furloughed people, because obviously there hasn't been a payroll then, but prior to when you were up and running. You can even look at 2019 is my understanding. And then that money is to be used from the minute it hits your checking account to 8 weeks out. However, they are allowing you to go back. So if you paid your employees March 1st on a payroll, that does qualify. That is our understanding.
Okay, and here's another one right along the same lines. So terminated and they went on unemployment. Can they stay on unemployment and receive these PPM monies, the PPP monies?
So if your employees are on unemployment, you can apply for the PPP. You can get the money for the PPP. You can use it for rent. You can use it for utilities. You can use it for to rehire your team member and salary again. You can use it for any of those things. Just in 8 weeks, you need to have spent all that money on those things. So here's what my suggestion is, because this is what I'm doing. I'm going to apply for the loan. When I get the money, I'm going to use it to pay my rent. I'm going to pay my utilities and my interest on any loans that I already have. Then I'm going to look at how much is left. And I hope at that point, I'm going to know when North Carolina is going to let us reopen our dental offices. And I'm going to decide how much of that money I need between then and reopening my office and how much I'll have left to pay my team. My fear is that if I hire my team now, I may run out of that money before I can even reopen my doors. And what I want to do is I want to be able to have my team in place and reopen my doors and support them on payroll for a couple of weeks before I have to start paying them out of what we're producing, because we all know that when we open, we're probably going to open a little bit slower. There's definitely going to be a lag in funds coming in, especially if your office is based on insurance, and the insurance dollars are going to be paying in now, and then when you reopen, there won't be a whole lot coming through the door. So you want to make sure that you will be able to pay your employees when you reopen the door. So you want to be careful and know what that timeline looks like. So again, I'm going to apply. I'm going to get the money. I'm going to look at my expenses between the time that I get the money and the time my doors are going to reopen, assuming that I know that. And then I'm going to make a wise decision as to when to rehire my team. What I want to do more than anything is to get my team members back on track. If I rehire them before I reopen my doors, am I going to allow them to stay at home, or am I going to ask them to come into my office? What I'm going to do is I'm not going to jeopardize the health of my employees. However, I have a long list of things I want them to do. I have CE for them to take online. I have systems that I want them to write up. I have phones I want them to answer. I have patients I want them to touch base with. There are a lot of things my team members can do from home. So if I can get them to work 4 to 6 hours a day on just keeping our office back up and going, that would be a great win for me. And a lot of that they can do from home. So doctors, start thinking about things your team members can do from home, assuming that we were going to hire them before they can get back into the office. And let's get them going on all the things we always wanted to do in the office, but we never had enough time to do.
So a quick question. When do we expect the PPP money to hit the bank?
So we are being told that from the time of application, it will take up to 3 weeks for it to hit the bank. And again, this is all new since Friday, and it's changing daily. I do know that the government wants to get it in your hands as quickly as possible. So speak with your banker. They may have a way to get it in there even quicker. I don't know, but we're being told it will take about 3 weeks.
When you apply for the EIDL, at what point do you realize what they're going to be offering you? When do they tell you how much they're going to loan you?
So when you apply for the EIDL, they guarantee that they'll give you the $10,000 within 3 days if you so elect. They do ask you, do you want to get the $10,000 right away? And I would suggest that you do. So we do know that you get that right away. I don't know how long it takes to find out how long after or how long you get it. My assumption is that you'll get it within the 3 weeks at the same way with the PPP, but I don't know. I can't answer that question. You guys have some great questions. I really appreciate you asking. There are a lot of people who just don't know and they want to know more. So by all means, let us know if you have any questions. I want to share with you guys my email because a couple people have questions after the webinars that they think about at home. And if you have questions and I can answer them, I will. So feel free to reach out to me at any time. It's Dr. Bobbi, DRBOBBI at stanleyinstitute.com. Dr. Bobbi, DRBOBBI at stanleyinstitute.com. I'm happy to direct you in the right direction. I will tell you guys, I work with Pinnacle Bank here in Cary. They're also in Raleigh, North Carolina. They have been fantastic. They reached out to me about 3 weeks ago and said, things are going to get tight. Is there anything you need? And of course I said no, because I'm a big proponent of doing the profit first philosophy, which is what I teach in my business class, where I have extra cash and extra checking accounts just in case. And I felt like I was set up really nicely. With the unknown, not knowing when my office is going to reopen and how long we're going to be down, I'm a little bit nervous about it. So I did speak with them the next week and said, you know what, why don't you increase my line of credit just in case? And so they said, of course, right away. And they jumped right on top of that. Will I need that? I don't know, but it's nice to know that it's there. I did take out a good chunk of that and put it in my checking account, because what I didn't want to have happen is to call the bank and say, now I need that line of credit, and them to say, we've frozen all funds because we've given out so much money. So, you know, I want to make sure that I have the money in place to keep my business alive. So if you don't have a line of credit, I would suggest that you go get a line of credit, even in addition to this that's coming out, because it may be advantageous down the road. And you may or may not want to go ahead and take that money out of the line of credit. Of course, you do have to start paying interest on that. I was okay with that, because I feel better having that money at my fingertips, knowing it's there if I need it, because the interest is just so little.
So a couple of questions relating to the $10,000 emergency fund that you can receive. That money gets drawn down out of the EIDL
Correct.
column.
Correct.
However, it's subtracted from your PPP money that you might get later.
Correct.
Okay.
So the only amount of money that you will get forgiven is the amount that you qualify in the PPP. So if you've already gotten the $10,000 from the EIDL, and then you qualify for a chunk from the PPP, they just subtract that amount from the PPP, or they roll it over, so that you only have that one lump sum that's getting forgiven. You don't have that one lump sum plus another $10,000.
There was a question, it was right in the middle. It was a question as to whether or not it's based on a adjusted gross income or W-2. Does that make sense?
Yes, that does make sense. And that's a great question. My understanding is that it is based on W-2, not adjusted.
If you have a couple of college kids that you still have on as dependents and they're over 16,
they qualify for
the $500 dependent?
No, the dependents is 16 and under. Anybody over that is $1,200.
Okay. That's why our college age kids are very happy.
We're just not going to tell them they're getting the check.
Yeah, we're just going to confiscate that.
And guys, again, this is the way we understand this law. Please, please, please check with your financial advisors, check with your banker, your CPA, your lawyers, if you have any questions, and just verify that all the information you're getting here is still appropriate, because it does change. Everything's happening so quick. What we understand now is totally different from what we understood on Friday when this was signed into law, which is the same that happened with the Family Medical Leave Act. I mean, it changed every day. And so as we were giving you more information, it was changing right before our eyes.
Okay, so here's a scenario. You have an employee who either quit or retired in January or February. And these calculations are based on last year's numbers,
Yes.
but that person's not in there.
Yes.
How do you do the math for that?
So what I would do is I would take the income from when they quit forward and get the monthly average from there. So if you have 6 months of that person not being on payroll, then I would take 6 months average, take the total, divide it by 6, and that would be my monthly average. And now you're going to multiply that times 2.5. When you go to apply for this, they're going to ask you how many employees you've had on payroll. That would be how many you currently have on payroll, or as of letting everybody go on furlough.
if you are a doctor and you're currently unemployed, can you apply for unemployment benefits?
That's a great question. And my understanding is yes, but every state is different. So please check with your state.
And if you were in that scenario, and you were going to apply, you would reduce, and you were a high income earner, you made over $100,000, would you reduce your salary for your application, or you would reduce your payments after you receive the PPP money to be $8,300 a month?
So if you receive PPP money and you pay salary, your salary with that, you no longer, you have to apply that salary against your unemployment. If you receive PPP money and you apply that to your rent, your utilities, now you're not paying salary. So doctor, you're still not getting a salary. You don't have to worry about that offsetting your unemployment. That unemployment only gets offsetted if you earn a salary.
Will I have to pay taxes on the PPP money?
That's a great question. And the answer is no, you will not. These are really good questions. And again, you know, things are changing so quickly, but I think the government's done a great thing to say that they're going to set us up nicely where we can at least breathe and sleep, because I'm sure there's been a lot of sleepless nights for you guys. Dr. Rob and I have been just racking our brain how we can keep our team members alive while keeping our practice from going under also. It's been a really stressful time for a lot of people, but I'll say what I said in the beginning. This is also an opportunity, doctors. If you own a business, it is time to sit down and work on your business. The first thing I would ask you to do is print out your procedure codes and the numbers of everything that you did for the first quarter of this year and for the last 3 years. Put it in a spreadsheet and look and see how many procedures you did from different categories. You may realize that you did 100 crowns last year and you did 3 the year before, 3 this year, or 100 crowns in 2018 and only 3 in 19. Well, why was that? What do we need to work on to get to that point? Or maybe your fluoride's dropping off in hygiene, or your quad scaling's dropping off in hygiene. These are things we really don't have time to sit down and look at. And now is the time. Sit down and look at these numbers and let's figure out where our office is off in numbers and what we can do to educate our team and retrain our team and get our verbiage back so that we can get our patients healthy again. Because what we don't want to do is have our quad scaling falling off, because then we know that our periodontal patients are not being taken care of and they're not being looked after to make them healthy. And the whole reason we're doctors and the whole reason we're here is for the health of our patients. So look at those numbers. Let's figure out why we're not doing what we're supposed to be doing in certain categories. And let's just readjust some things. It may mean that we need to market more. I mean, maybe all of a sudden we're not doing as many implants as we used to. Maybe you need to take an implant course. You know, Dr. Rob has a great implant course in Stanley Institute and would welcome you guys to come. Or maybe you just need to increase your marketing dollars more in that category. So look at your procedures, look and see how they've tracked over the last 3 to 4 years, including the first quarter of this year. And then let's see where you're going to end up at the end of 2020. Guys, I honestly believe 2020 can very well be your most profitable year ever. With this shutdown that we have, if you use this time to work on your business and not in your business, you will be profitable when you reopen, because you will have things in order for you to be able to make money and take care of your patients and take care of your team. It's going to be a great year. We just have to use this opportunity to work more with our business so we can make it profitable.
We're coming up on the end of our time here, and just a couple of housekeeping things real quick. In order to get your CE for this 1 hour, make sure that you fill out the survey at the end of the video here. And there's also a place on there where you can add comments. We haven't been able to get to all the questions. Some of the questions are rather particular, very specific to individuals. In those particular cases, we really encourage you to reach out to Dr. Bobbi and ask her. She can give you some one-on-one advice very easily. It would be easier than me trying to read all of these. I do have a couple of more questions if we have just a few more minutes.
Okay, yeah.
All right. So if you have bad credit, can you still apply for the PPP?
You can. There's no judgment. It's not based on need. So they have told us that if you apply, everybody gets it. That's our understanding today.
You talked about the fact that, many offices have let a significant number of people go. They're working on their skeleton crew. And how do we do the math? If we apply for the PPP and we have a couple of people in and we're seeing emergencies, how do we do the math at the end of the year so it all works out?
So what I would suggest is that you get your monthly average from when you fully employed people. So that's going to be your monthly average when you fully employed people, assuming that you want to fully bring those people back. So you get that average, you multiply it times 2.5, and that's the amount that you go and ask for. Now listen, if you don't use that money for salary, if you only bring back half of your people and you're like, oh my God, only half of it's going to be forgiven, then just give the other half back. It's not a big deal. Just don't spend it. Give it back. So don't be fearful to ask for as much money as you can get, and then try to use that money for what's going to be forgiven, for rent, utilities, salary, health insurance benefits, that sort of thing. Now it has to be group health insurance. Remember that. But all of that qualifies. And then at the end of the month, at the end of the 8 weeks, if there's money left over, give it back. Let me give you a suggestion, guys. Go to the bank and open a separate checking account for this money. Have this money put in that checking account, and then pay your payroll out of that checking account, pay your rent out of that checking account, pay your interest for your loans out of that checking account. And at the end of 8 weeks, if there's money left in that checking account, give it back to the government. Or you can keep it at 4% interest and pay for it over the next 10 years and use it for something in your business to actually help your business. But it would help a lot to have a separate checking account for this money, and then you pay those things out of that checking account, and that'll help you keep up with what this money should go for.
Well, that's a great tip, Dr. Bobbi. When will we be able to listen to this again? When will this recording be available?
Tomorrow morning. We're going to have this out for you guys tomorrow morning. It's going to be on YouTube with Stanley Institute.
Mm-hmm. So yeah, please subscribe to our YouTube channel under Stanley Institute. All of the videos we've been making in the last few weeks are located there and going forward as well.
Guys, again, my email is drbobbi@stanleyinstitute.com. It's DRBOBBI@stanleyinstitute.com. I do like hearing from you guys. It warms my heart to know that we're all in this together, and we're all going to come out on the other side together. And, we're all here for our patients. We're all here for our team members. And again, I wholeheartedly believe that 2020 is going to be our best year ever. We just really have to focus on this time to make sure that we're taking care of our business and taking care of each other, staying healthy, staying off the streets, stay at home, please, so that we can get this virus out of here.
Yeah. Dr. Stanley, you've mentioned two banks. You mentioned Live Oak Bank out of Wilmington and Pinnacle out of Raleigh here. If you don't have access to those banks, can you use your own bank?
You can. There are a lot of banks that are going to qualify for this. Most banks that do SBA loans will qualify. Reach out with your bank and ask them if they will be part of this. If not, then you can reach out to Pinnacle. You can reach out to Live Oak. First Citizens has also been mentioned as a bank that would qualify for this. But again, reach out to your bank, ask them, and they'll guide you appropriately.
So someone was given some advice that if your team and you are unemployed, you cannot apply for the PPP loan.
That is bad advice. The whole reason the PPP loan is there is to get you reemployed. It's to rehire your team, to rehire you. So again, Dr. Rob and I are not employed any longer. We're not making money at our practice. So officially we're unemployed. Our team members are unemployed. We're applying for the PPP so we can hire everybody back on. That's the whole purpose of it. All right, one last question. Do you have one more for me? Or are we done?
The amount of forgiveness, this is a good question. Is it just the $10,000 or is it the total value of the PPP that's given?
So the amount of forgiveness is the total value of the PPP. If you get the $10,000, it will be part of the PPP. They'll roll it over into it. So it'll be part of that. So whatever you qualify in the PPP will be what will be forgiven, assuming that you spend it for the things that were listed. It's spent within 8 weeks. And at the end of the year, you have the same number of employees with the same amount of payroll. All those factors have to go in. And when you apply with it with your bank, they will help you with that.
So guys, one more time, we weren't able to get to all the questions, but we do want to reiterate that the video is going to be free for you guys to watch as many times as you want. And it's going to be on our Stanley Institute YouTube channel. Please go out there and watch it again, especially if you joined a little late and you missed the introduction where we talked about the high-level specifics of the two programs that we talked about today. Thank you so much. One last thing, please give us honest feedback on those surveys. Fill out those surveys for your CE. That's good, get that done, but give us honest feedback of what you'd like to see in the near future so we can bring you what you need to keep yourself safe and your family safe.
Okay, guys, stay safe, stay home. Bye.
Bye-bye, guys.